Hello, I'm Christoforos Konstantatos from University of Patras, Greece, and I will present you our research paper with the title Minimize Transmission of Systemic Banking Risk Through Automatic Short-Term Intervention Mechanism Intra-day Circuit Breaker, a study on the Greek banking system and capital controls. The research paper is a collaboration with Athanasios, Tsagkanosd, Konstantinos, Gkillasb, and Christos, Florosa. So, our research question is simple. Extreme discontinuous movements, jumps, in price of a Greek bank is correlated with extreme jumps in price of another Greek bank? And if yes, how? So, our research paper investigates the transmission of systemic risk on the Greek banking institutions, focusing on three objectives. First, the capital controls and how they affect the jumps on equity price of Greek bank institutions, considering the Alpha Bank, Eurobank, National Bank of Greece, and Piraeus Bank, the period of analysis that spans from January 2nd, 2001 to December 29th, 2019. Second, the extreme correlation between the jumps on equity prices of Greek banking institutions. And third, we test the intraday circuit breaker. What is intraday circuit breaker? It should be noted that in particular, the intraday circuit breaker has been a little explored in the international literature and has only recently begun to attract the research interest. How it works. When the market moves downwards in negative returns and exceeds a certain limit, the intraday switch can replace any long-term closing of the market, as happened in June 2015, in order to avoid the long-term consequences in financial markets and the real economy. Our research explores the systemic risk in the Greek banking sector, focusing on three interesting objectives as follows. The recent financial crisis has highlighted the fragile structure of the modern financial system and triggered an unprecedented debt crisis with banking and fiscal instability, especially in Southern European countries. The causes of the crisis in the Eurozone have been largely analyzed at research level, mostly with conventional econometric techniques, which admittedly fail in times of financial instability, high volatility, and the occurrence of excessive losses, extreme events, and fail to effectively interpret the dependent structures and the behavior of the participants in the economy. A substantial and effective understanding with sufficiently recognized appropriate statistical research tools in fragile financial environment could provide useful information, first, to the economic policy makers, second, to the investors themselves, and third, to the banking institutions in order to understand and quantify effectively the financial risk. The objective of this research is to apply the extreme value theory into the fractional changes in the Greek banking system and develop a mathematical and econometric models with an emphasis to the multivariate analysis on the extreme events on jumps of equity prices of Greek banking institutions. The intraday circuit breaker proposed by Gkillasb and Login in 2018 is also investigated, if and whether it could be used in Greek banking market. This mechanism gives to the authorities an effective tool for temporarily pause the negotiation of a market in case of a stock price decrease below a threshold. We focus on Greek banks for the period that spans from January 2nd to 2001 to December 29th, 2019. Consequently, our dataset consists of the 4 largest banks in Greece: the Alpha Bank, the Eurobank, the National Bank of Greece, and the Piraeus Bank. So for our modeling approach, we deal with the jump detection as well with quantifying the jumps by following the Brendardorf, D. Nielsen, and Shepard 2006, Anderson et al. In 2007, and Duong and Swanson in 2015. We deal with extreme correlation by following Hulakian and Stephens in 2012, applying a failure to reject method in order to select the threshold in a predetermined range as defined with the EMI, EMI is the empirical mean excess, function, to keep as many sample data as possible. The scale parameter and the tail index are estimated by the maximum likelihood method. Also, we use the graphical tool of the EMI to select the threshold. The mean excess plot is accurately described by Davidson and Smith in 1990. So we contribute by applying the extreme value theory. We're able to calculate the probability that an extreme events, in our case extreme downside jumps, that will take place simultaneously in 2 banks. We focus on the bivariate peaks over threshold method to calculate the tail dependencies to quantify the dependencies of jumps on Greek banking sector. Furthermore, adapting lags between the jumps that take place in one bank and in another bank. So adapting lags to the size of jumps in one of the 2 banks under study, we can model the time between the extreme events in a bank institution and the extreme event that follows in another bank institution. Also, how an intra-day circuit breaker mechanism which stop the trading will decrease the probability of another extreme event occurs. The effective use of the results of the present study in terms of economic policy gives a useful tool for the protection of the banking and financial system and consequently to the real economy. In this research, we consider that we offer a research of high research interest as it provides innovative econometric method of global valuation of capital control and intraday circuit breaker. So, I want to mention that this research is co-financed by Greece and the European Union, the European Social Fund, through the operational program which is called Human Resources Development, Education and Lifelong Learning 2014-2020 in the context of the project with the name Minimize Transmission of Systemic Banking Risk through Automatic Short-Term Intervention Mechanism, Intraday Circuit Breaker, a study on the Greek banking system and capital control with the MIS code 5047178. Thank you for your attention.